can I throw in a question?
By all means, yeah,
for
yeah,
Parker.
for sure.
Like, Saylor famously, promises not to sell his Bitcoin. But if your North Star really is Bitcoin per share or Solana per share, then in the bear market, if your stock's at a discount, like it might make sense to buy back stock and sell Solana. Would you differentiate your strategy versus that never sell one?
Certainly, given that our North Star and all executive and non-executive bonuses are tied to Solana per share growth, we're pretty highly incentivized to, do buybacks. There's some situations where maybe it wouldn't make sense, and at a very small short-term discount, maybe it doesn't make sense, but if it gets deep enough, I think we'd have to take a pretty serious look at returning value to shareholders.
All right, we got Matt Sigel and Parker White here on the sidelines of the big Solana conference, and who better to be chatting with right now than, I think, the intersection of you guys is the institutional focus right now on Solana. And Parker, maybe we start with you just because of the way that your whole project, DeFi Dev, is built around kind of giving people access to Solana through your guys' company. We'll start there. Why is this the route to go?
Yeah, we think that DeFi Dev is the fastest way to accumulate Solana, whether that's through staking, running our own validator, staking to the validator, getting external delegated stake to the validator business, a lot of the capital markets activity that we can do. We believe we can stack SOL faster than any other entity on the planet can stack SOL. So Solana per share is our kind of number one focus, and we're trying to provide the best vehicle for public markets exposure to Solana.
And Matt, at VanEck, you guys kind of leading the charge with pursuing the Solana ETF in the way that a lot of pressure is mounting, I guess you can call it that, in the way that institutions and institutional investors really want to play in this ecosystem. And Solana, obviously a very large piece and growing piece of the crypto market. So what are you seeing right now in terms of that enthusiasm continuing to grow?
I think the big story right now is the equity markets. The equity capital markets are wide open for anything crypto related. So we're just seeing an explosion in the number of firms that are looking to stack Bitcoin, Solana. I even saw a couple of Ethereum hodlers come to market over the last couple days. There are so many institutional investors who prefer equities. And I think a big part of it is the governance and disclosure is standardized. Mm-hmm. The insider information, less prevalent, and those securities can fit right alongside a typical equity portfolio. So we're running token funds, we're running equity funds that are geared to crypto. There's actually a lot more market cap in that than there is even in the token part of the world. And generally interest is quite high. There's still so many advisors that are stuck on zero with their crypto allocation, and we just want to provide intelligently designed products to serve their desires.
Obviously, a lot of this kind of pioneered with what strategy, previously MicroStrategy, has been doing with Bitcoin. And I guess the idea here would be somewhat fair to say parallel to what strategy is doing with Bitcoin, but with what you guys are doing with Solana. But then you add the other components in terms of validators and other pieces that stack up. Is it fair? How do you kind of compare to what strategy's done?
Yeah, we kind of think of it as the MicroStrategy 2.0. And so we take the MicroStrategy playbook and we add in these extra layers, some that you mentioned. There's some other ways that we can generate extra yield. And so because Solana is a native yield asset and it's this kind of fuel inside of this whole DeFi ecosystem, there's a bunch of things that you can do with Solana, the asset, on kind of an actively managed basis to generate extra yield, as opposed to Bitcoin, which Bitcoin's great. I love Bitcoin, but it is kind of a digital gold and kind of sits in a vault and just provides its value by being there. So there's less you can do with it, and therefore maybe less value to building a treasury company on top of it. Of course, what MicroStrategy has done is great, though.
Well, what it's done, I guess, is also kind of dealing with an entirely different asset. And Matt, when you look at that piece of it, Bitcoin's volatility, weirdly, I think, has come down. It's almost kind of night and day in thinking about where we were 10 years ago and where we are now and the type of investor who wants to get into it compared to the type of investor 10 years ago. Is it fair to maybe say that the Solana today is like the Bitcoin back then? How do you kind of compare that piece and how you communicate to investors why these things would be good to include in their portfolio.
Yeah, Bitcoin volatility actually fell below gold's. That is very, very unusual. Counterintuitively, that actually can justify a higher position size. If you're an institutional investor, like the higher the volatility, the smaller the position size you may take. So I think it's in the end a positive tailwind. If we look at how these stocks are valued, so MicroStrategy famously trades at about 100% premium to the value of its Bitcoin. There's 3 Solana treasury companies, more or less. They're trading at 4 to 6 times the value of their Solana.
He did his homework.
So the market's optimistic about these business models. I think it's because of what Parker says, that there's actually technology value add that these companies can bring as staking providers, and whereas most of the Bitcoin treasury companies are really just hedge funds wrapped into a traditional security. So, I mentioned the governance may be good is on the disclosure side, but on the other hand, there really are black boxes. So yeah, the native yield of Solana is helpful. I don't know if I would say Solana is where Bitcoin was 10 years ago. I still think there's a lot of risk to these strategies around dilution and debt. And you can kind of parallel it to the altcoin market. The size of the altcoin market and market cap is the same as it was 4 years ago, but there's 41 million new tokens. So everyone has kind of diluted so much that these huge gaps have opened up between market cap and price. So I'm enthusiastic about the experimentation that's happening, but cautious around levels of debt. When we saw everyone who had debt last cycle went bankrupt, whether it was the centralized lenders, Genesis, BlockFi, Celsius, or the Bitcoin miners themselves, most of them that had debt went bankrupt. So one part of me is allergic to that, but I'm also respectful of the innovation and the customer demand. And if these firms can find convertible bond arbitrageurs and package that volatility consistently, which is what Saylor has done, then I think there is room for more than one to succeed.
Yeah, and Parker, I suppose that's kind of right where your whole time is spent as COO and CIO of kind of running this. I mean, how do you kind of look at people's risk factors or digestion of everything Matt just said and kind of explain to them, here's why it works?
Yeah, I mean, I think, before I jump into that, I think an important thing that, we think about a lot is that the winners in this model, because there are a bunch of people coming to market, the winners in this model will not be determined in the bull market. They will be determined in the bear market. And so I think that really comes down to team and execution. And so you really want to see, when you're evaluating one of these treasury strategies, you really want to see a team that has been around for the long haul, that has seen multiple bear markets, that survived the FTX blow up, that survived the 2018 bear market, second massive leg down to 3,000. And so you want to, if you're thinking about a long-term investment, in my view, you want to look at a team that's going to be around for the long haul and is going to survive the bear market. Because as with the tokens, I think you're going to see a lot of these treasury strategies that also struggle in the bear market because maybe it's their first bear market or they're just not, experienced in the space dealing with this level of volatility. So I think that's an important differentiator. And, Saylor, the reason he is where he is today is because he cut his teeth in the last market and he was the only one doing it. And then he survived the full bear market where people are out there saying, hey, they're going to, get margin called or whatever. And it didn't happen, right? And he was disciplined and prudent. And so I think that's, very important here for the long term.
Let's talk about the next chapter too, though, because, I was just down chatting with Hester Peirce and the SEC and the crypto task force, and the idea of having a new chair come in that's pro-crypto, understands its technology, wants to see it thrive in the US is night and day from what we had for the last 4 years. And so I think all of us in this room kind of counting down the days for the Solana ETF to finally get approved, if that's the case. How does that kind of change your guys' focus in terms of looking at Solana and seeing the opportunities there? Matt, maybe if that does exist, does that automatically kind of change it, stepwise function in terms of the same way that it happened for Bitcoin, or how do you look at that differently?
I think that There's still some operational details around how to manage a staked Solana ETF that we don't have answers to. And unfortunately, that information needs to come from the IRS. And the IRS is not included in the crypto task force. That's why we're in this holding period, because when you're staking and unstaking the Solana that would theoretically be inside of one of these ETFs, that's a form of active management that we think can blow up the tax status of one of these ETFs and make it unappealing. SEC has to, provide the rules of the road as to how these will be created and redeemed in kind, not for cash, and how we can handle the operational details around staking. But once that happens, then all of the US-based broker-dealers will be touching these assets directly. Right now, they use their offshore affiliates to source the Bitcoin and source the Ethereum, and it means that the US balance sheets of broker-dealers don't have any Bitcoin on it, and that means that there's not really structured products that are being manufactured because they don't have the balance sheets to hedge those exposures. So I think the biggest impact will be in the derivatives market. If you look at the size of the derivatives market for equity and fixed income, it's like 15 times the size of the underlying spot. If you look at crypto, the derivatives market is a tiny fraction of the spot market. That's where the leverage, I think, will come from. Most crypto bull markets kind of end in a blow-off leverage top. There's no balance sheets right now that are really providing that. No one has stepped into the holes left by BlockFi Celsius. They're on the margins they are, Coinbase a little bit, right? But I think it'll be TradFi leverage that turbocharges the end of the bull market.
Yeah. And Parker, I guess for you on the other side too, it's like thinking about the opportunity in Solana, we haven't touched on kind of the developer landscape or ecosystem in terms of all the other projects also now kind of building on Solana. I wonder if that's also tied into kind of the opportunity that you see in terms of Solana just continuing to attract more talent like that.
Yeah, absolutely. I mean, we're the name of the company, DeFi Development Corporation, we selected that for a reason. And because ultimately we are champions for the Solana ecosystem. And so one of the things, we kind of see our stock as a bit of a gateway. And so we're having a lot of conversations with investors, whether it's through, deal type roadshows and non-deal roadshows, analyst calls, all these things. And of course, people ask, hey, what are you guys doing? Hey, we're the best way to accumulate Solana. And they're like, cool, what's Solana? And so then we basically become the Solana evangelists. And actually, Joseph, our CEO, is going to hate me for saying this, but we've dubbed him Solana Jesus. So we've seen the memes floating around. Maybe he's got a beard and long hair. He does not like it, but that just fuels us more. But we are Solana evangelists, and our hope is that as we help people, funds get off zero and get a small allocation to Solana via something that's very friendly, it's very familiar. Hey, you can just buy it in your Prime brokerage account. Then they'll start to kind of go down the rabbit hole, and maybe we can get some of these guys trading in DeFi, providing liquidity in DeFi, making markets, kind of getting involved. Because once you have a little bit of skin in the game, it becomes much easier to do the homework, do the research. And so if we can be that tool to give people a little bit of skin in the game, I think we can ultimately be a force for good in the Solana ecosystem, which is, pretty exciting.
Yeah. To wrap up and kind of pair all of these points together, Matt, obviously VanEck, the research you guys do is great at kind of synthesizing the idea of here's why Bitcoin can eventually trade at this price because all of these different metrics and everything that goes into your analysis. I mean, when you look at the opportunity in Solana now, kind of piggybacking off what Parker was just talking about, how do you kind of synthesize it all down if this is an asset that is just kind of getting started, if I think that's fair to say that Solana's still kind of early based on that?
We think the most likely scenario is that most of the economic activity on open source blockchains will consolidate into one or a small handful of layer ones, and the key variables are the tech stack and how performant it is, and how strong is the culture / memeability. So I joined VanEck in 2021. We've been very bullish on Solana. Since then, we wrote some pretty aggressive price targets, in the bear market that have been playing out. And we think it has the best shot of becoming that leading blockchain. So it's really validating to the thesis to have now 3 public companies that have committed to that treasury strategy. I think it's a validation of the market share gains that the chain has made. But I guess can I throw in a question?
By all means, yeah,
for Parker.
For sure.
Like, Saylor famously, promises not to sell his Bitcoin for any reason, and the market occasionally worries, like, what if this 3-4% holder starts to dump? But he's kind of set that guidepost: we're not selling, right? But if your North Star really is Bitcoin per share or Solana per share, then in the bear market, if your stock's at a discount, like, it might make sense to buy back stock and sell Solana. Would you differentiate your strategy versus that never sell one, or?
Yeah, I wouldn't put a guidepost on the other side and guarantee that we'll sell. We haven't really published a policy yet, but certainly given that our North Star and all executive and non-executive bonuses are tied to Solana per share growth, we're pretty highly incentivized to, do buybacks. And so, there's some situations where maybe it wouldn't make sense, and at a very small short-term discount, maybe it doesn't make sense. But if it gets deep enough, I think we'd have to take a pretty serious look at returning value to shareholders. It could be in the form of buybacks. It could also be in the form of some type of, maybe it's a special dividend, a SOL-denominated dividend, something to, help set not a firm floor, but some kind of tether to the 1x number.
Yeah. Well, I think in terms of pairing, again, the idea of inflows, I mean, obviously there's the Solana Europe equivalent to what would be the ETF here. I think it's been interesting to kind of see that before with kind of other, like with the Ethereum ETF. They existed elsewhere. Canada, they beat us to it. And you don't see the same flows. The US market is an entirely different beast. And when you pair that with kind of what you guys are doing, and like you said, 3 of them now operating kind of in the same lane, it seems like it's still early. And so Parker, for your guys' kind of estimation of where this all goes, I'm sure you've also looked at the numbers and have expectations of what Solana can be too. I'd be remiss if I didn't ask you the same thing in terms of what your kind of, I guess, projections are for where Solana goes from here.
That's a great question. Obviously, we're huge Solana bulls. Where it goes this cycle versus the next cycle and beyond, it's very reflexive, and things can go well beyond what you can think. But I think long term, thinking about the ecosystem, I think we're definitely aligned. Like the Solana ecosystem, I mean, just go use the products on chain. Have one phone running some Solana apps and the other running some, EVM apps, and like you try to do a daily, walkabout of financial infrastructure, and you'll see a pretty marked difference, both on the UX and candidly on the UI and the focus on just like user usability. So I think long term that will lead to some pretty solid gains on the Solana side. But what that does in the next 6 months, 12 months, I mean, the beauty of Solana is highly volatile, and volatility is very important for treasury strategies. I don't really care. I hope it goes up. I just hope it's super volatile on the way there.
Well, either way, it's definitely growing. We do know that, and evidenced by us being here chatting Solana. But Matt, Parker, thank you guys so much. Appreciate it.